Hey guys, Lancy here. Hope everyone's doing well. Thanks for joining me and looking to some more market updates. Now, this is not going to be a magic MTG market update. This is going to be about the stocks and also maybe what the Federal Reserve is going to do and just trying to see what the chances are because everything that happens in the stock market also has an impact on the bigger economy, which then has an impact on card prices, which has an impact on recession fears, jobs, etc. So I just want to see what exactly has been happening and just see what the markets are going to be doing. So we'll start off with the markets itself. So I've got Bitcoin, but let's move on to something that's probably going to impact more people than even crypto, which is the S&P 500. Now this is very interesting. So over the last couple of weeks, we've seen the market just move nice and easily up to hit the 200-day moving average at 430 points for the S&P 500 or 4,300 for the SPX. Now, the 4,300 was an important number to try to grab. It has been resistance and support in the past many times. As you can see, if we trace this back, 430, two times it's been resistance and support. 1, 2, 3, 4, 5. What is that? Almost 6 times in the past. So it's a very big number and it's very important. So the market rose up to it pretty easily, and then over the last couple of days has been trending down after it hit the 4,300. So, firstly, MACD trending down but hasn't crossed, and the RSI overbought, especially at the 4,300, and now on the way back down. Does this mean it is going to crash? Not based on this. This was overbought. This was oversold. So if you look at it just from technicals, this was oversold. So people were too far in, and then it was overbought, and then it had maybe a short squeeze at the top. But what's happening right now is a pullback, most likely selling pressure from the fact that people made a lot of profit, and maybe the fact that the Federal Reserve had some speeches on Thursday, Friday last week, which were pretty much saying we're going to keep increasing interest rates until we see interest rates come back down to 2%, because we need to save our pride. Wait, is it pride? Reputation. Because the Federal Reserve's reputation right now is pretty much in the can. So let's have a look at what's going to happen, because the big thing is Jackson Hole, Powell, and his Federal Reserve buddies get to have a speech coming up, I think in, when is it? 10 a.m. Washington time Friday. So I think it's this coming Friday, where they come back and say what it is they want to do for the next couple of weeks. So he hasn't actually had a good chance to speak until July 27th. And it doesn't actually say, I think it's this coming Friday. I think it's meant to be this coming Friday. He's going to go up there and he's going to mention and talk about what he thinks the economy is doing, how aggressive the Federal Reserve wants to be. And he's going to do a lot of jawboning to bring the market down, to calm the market a bit. Because right now the market's pretty much saying, yeah, we don't really believe what the Federal Reserve is doing. We just think that they're going to be, we don't actually trust them. They say that they're going to increase interest rates to fight inflation, but they've done a really shitty job. So we'll see what comes out of it this Friday. But the market's positioning for the Federal Reserve to be aggressive after all of this fun times that it had over the last couple of weeks. So crypto obviously jumped ahead of the gun for that one. The DXY is trying to beat $108. And I'll admit, for now, it does show strength. But once again, there's a very high chance that it could stabilize at 180.45 at this double top. And then on Friday, the Federal Reserve might just come up as wimps, and then it just crashes all the way back down and falls down to 100 or even lower. And then in that case, crypto stocks, oh boy, they will do really well. So moving over to a couple of other ones. So we covered Bitcoin. currently looks pretty weak. RSI crossed over. RSI is dropping. MACD is crossed over and falling. It's in the red. VIX doing really well. Massive spike today. I assume that the S&P futures, which I should have brought up, are not doing well. The US 10-year, very important to watch. This thing has to get over 3 to really start spooking the market, to make the market really scared. If it starts falling from here onwards and falls down pretty aggressively, then the market's going to pick back up as well. I'm not 100% sure exactly why AUD is doing better than Euro and UK GBP against the US dollar, but it's good to see, because otherwise any savings that anyone in Australia has is just going down the drain. US oil and UK oil, both below the 200-day moving average. They are showing strength, but they're not showing strength enough to pop above the 200-day moving average. They look like they're almost going to just continue flatlining until someone comes out and says something that's bullish for oil, which I guess recession fears are winning out right now. Apple, man, there was a point where 145 was almost too expensive for Apple, but look at where it is now. Like, that is a huge run up. And I'm not 100% sure how many people are going to be out there buying Apple phones, but it looks like they are pumping it out. And there's news coming out recently which said that every time Apple does a software update, it slows down everyone's phone. So genius move, but it does look like it's turning over. If Apple falls below 169, it's actually got a long way to go. And where Apple goes, the market goes as well. Silver, sadly, not looking well at all. The ASX, Australian index, not looking well at all. Everything is turning down. But this is a time to be careful. When the signal is this clear, you got to be careful, because anything positive or negative or whatever the Federal Reserve says, if they wimp out, this can actually spike above. This can spike above the 200-day moving average, and then it's probably going to be there for the rest of the year. So the next week is very important, because that shows that this 200-day moving average is being respected, and currently it is. Currently it is in all the ways that makes it so clear for trading. But when it makes it so clear for trading, the market doesn't like to make things too easy, so it doesn't really make sense if it's going to be that clear. The Nasdaq, on the other hand, is above the 200-day moving average, which is quite impressive, and there's a chance that it might hit support at the 200-day, which is a very big change of pace. Copper, below the 200. Last couple of times it hit its head on it, but it is above the 50-day. It's above the 20. It's above the 9. Is it above the 9? It's hard to tell. It might actually close below the 9, in which case it could be rolling over. But we'll have to see how that goes. And Amazon hit the 200-day moving average, turning down. Once again, it all seems very much tied together. Netflix fell too fast, so it's impossible to catch that. What else do we have? Meta, Facebook. What's Facebook doing? Flatlining and or dropping. Doesn't look too good. It is showing strength on the RSI. I will admit, as the RSI moves down, and if the stock price flatlines or drops while the RSI moves up, that's contrarian, which usually means there's some buying power at this level, which means at some point it could pump up to the 225. But that all depends on fundamentals as well as technicals. As far as everything else goes, nothing too crazy. Lumber is probably a big one, because a lot of people care about building supplies. It's actually still holding up pretty well. It took a bit of a dive. It is below, let me just have a quick check. It's below the 200-day, and it's been bouncing its head on it. So, and its RSI is showing loss of strength. So there's a chance that lumber might actually drop down. And if lumber drops down, that's one of the 30% increases of building supplies. So, there's a chance that we might actually see building supplies drop down by, let's say, 15%. That'll make building easier, I guess. One of the big things about building new houses is all the materials are super expensive. So is the Federal Reserve going to rake interest rate by 100 in September? Very doubtful. Are they going to raise it by 50? Yep, much more likely. So I'm thinking anywhere between 50 and 75, and I'm actually leaning towards 50. But I think they're going to raise it by 50 and say, this is not the last interest rate rise. We're going to keep rising, but we will look at data to make sure that we're not making things fall over, which the markets might like, but it depends on what level they're at right now at that point. Because right now, I feel like they're too high for even a 50 basis point rise with a promise of more to follow. They almost feel like the Federal Reserve is now about to just give up and lower interest rates, which I don't think they're going to do, because I think the Federal Reserve actually does feel like their credibility is damaged. At least I hope they understand that it has been damaged, which means that they had to put a lot more effort in to promise beyond just words what they are going to do. What do I think that this is going to have an impact on the magic market? Yes. Until we see job losses, which is what the Federal Reserve wants to get out of this interest rate rise, we're not going to see a big drop in the market price of any magic cards. We might see a slowdown in purchases, but Wizards of the Coast will obviously just print less. But I am expecting more impact once we see job losses increase, once we see hiring signs decrease. I'm expecting more and more impact coming over time. So, yeah. Anyways, I'm probably going to call this video. Like I said, I'm trying to make a video every day, and I have a lot to talk about, but I also want to get some games in and stuff. So I'm probably going to do like a let's play. I might even do a Skyrim let's play and just see if people are interested to watch that. But anyways, guys, thanks for watching. Have a good one, and see you later.